Your hack for making money over the long term is to always make sure that when you win, you mathematically make more than when you lose. I'm constantly amazed by how many new traders completely disregard this one simple concept. The trick is to connect a positive risk-reward profile with the structure in the market. So say, for example, in this situation, I think the market is going to trade higher. I need to answer two questions. The first one is, where do I think the market is going to trade to so that I can exit with a profit? The second question is, where do I believe the market is going to tell me that my trade idea is wrong? Once I've got those two bits of information, I can buy the market, and as long as I have a greater distance between my entry to my exit than I have from my entry to my stop loss, I will always be working with a positive risk-reward profile. Let's be a little bit more precise. If the distance that I'm willing to risk in the market is 30 pips, then I need the distance that I'm looking to take profits in to be greater than 30 pips. In trading, we express these as ratios, and usually most traders will look to achieve double the distance in the market that they are willing to risk. So for 30 pips, they'd look to make 60, or for 50, they'd look to make 100. That is having a risk-reward profile of 2 to 1. I'm looking to make 2 units for each unit I'm willing to risk. The great news is that most charting platforms will offer you lots of different tools to help you work with a positive risk-reward profile. I'm going to look at 2 versions on MetaTrader and also on TradingView. On our website, on the MetaTrader 4 platform, we have a risk manager tool you can see here. And if I was going to buy this dollar-yen pair, just roughly where it is, all I need to do is turn it on and it puts this red and green line on the chart. If I click these, you'll see that it starts to alter the risk-reward profile. If I move the take profit target up now, I can create a trading opportunity which is balanced in terms of risk-reward. So whatever I'm risking here to the downside, I'm making double that to the upside. On TradingView, it's actually a little bit easier. There is a tool here. If I click this button here, you can see that it gives me, wherever I place it on the chart, gives me this structure here, green and red boxes. That allows me to align my risk-reward profile just exactly as I want it. So I can move this around, and the calculations in the middle of the screen will let me just create the type of trade that I want. Now, all this is great, but there is one very important lesson to learn. All of this has got nothing to do with knowing if the trade itself is more likely to win or lose. Therefore, trading is very similar to flipping a coin. In a coin flip, you've only got a choice of 2 outcomes, heads or tails. Now, which is it more likely to be? Got literally no idea, and it's the same in the market. You don't know which trades are going to win and which ones are going to lose. However, if every time we flip the coin we were to get $10 if we get heads versus lose $5 if we were to get a tails, then over a large enough distribution of coin flips, because it's a 50-50 situation, eventually we'd start to make money.